In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host and financial advisor, Rick Everett, along with a full complement of panelists for this episode to include Danny Goolsby, founding partner and financial advisor with Market Advisory Group. From Market Tax Services, our lead CPA, Joshua Cicora. Medicare specialist with Market Medicare Advisors, Mark Benefiel. And with Eidelman Law Firm, our estate planning attorney, Gerald Eidelman. Again, welcome in, everyone. We want to talk today about how we work on a collaborative basis between the different disciplines that involve different strategies and approaches, whether it be from an estate planning or tax perspective, health insurance, or financial advising. The team here at Market Advisory Group is able to handle a lot of unique and complex scenarios. Let's start by talking about Social Security and when to file. Social Security and the many different situations that we run into around the conference tables of Market Advisory Group. Questions like, when is the best time to file? How do my circumstances affect how much I'll receive? We thought we'd take this segment to ask and answer hypothetical questions that we have come across with various clients and prospective clients. The first question, my spouse, who is a year older than I am, claimed his worker benefit at full retirement age. I'm only eligible for a spousal benefit. I'm approaching my full retirement age and am trying to decide when to claim my benefit. Will my spousal benefit increase, Danny, if I defer my benefits until age 70?
And the answer is no. And let me start before we get going here with Social Security, these questions, because what we're wanting to discuss during this first block is all of the different nuances that there are to Social Security. So for example, there's going to be a worker's benefit. There's going to be something that would be a spousal benefit. There would be something that would be a survivor's benefit. There would be something that would be a widow's benefit. So there's lots of different benefits to Social Security. And there's different answers to different parts of that. So to your question, first of all, no, for a worker's benefits, they're the only ones that are eligible for deferral credits. So this, to your point of your question, so this person should claim at full retirement age because they're not going to get deferral credits. Okay.
Question number two. My spouse claimed his worker benefit at age 70. Is that going to have any impact on my spousal benefit?
And again, no. So if your spouse is claiming it at age 70, there are no deferral credits for a spousal benefit. So it's only deferral credits that are available on a worker's benefit. And again, one of the things that we're going to try to illustrate here today through this first block is all of the different subtleties that make things different. There's a lot of confusion out there in the public arena on when it comes to Social Security and why my neighbor might be getting something or a coworker might be getting something and I'm not eligible for that. So that's some of these things that we want to try to drill down on today. Again, there are no deferral credits for spousal benefits. There are only deferral credits for waiting longer to age 70 on the worker benefit.
Now, here's the third question that we see quite often around the conference tables of Market Advisory Group, and it has to do with spousal benefits based on a former marriage. So can I receive a spousal benefit based on a former marriage if I'm currently remarried?
And the answer is no. So you have to be currently unmarried to receive a spousal benefit based on a former marriage, but there's also some extra little caveats in there for you to receive that benefit. So in order to receive benefits on a spousal basis from a former marriage, that former marriage must have lasted at least 10 years in length. And again, like Social Security, there is a subtlety to this question as well. Unless you're older than age 60. If you're older than age 60, you can be eligible for survivor's benefits on that form of marriage, again, as long as that marriage lasted at least 10 years.
Continuing along the line with Social Security, in this scenario, the person was born in 1953, and the question is, I'm planning to claim my worker benefit at age 70. I'm currently divorced. Is there anything I can do to improve my situation?
And in this case, there may be some things that you can do to improve your situation. So again, the first metric you have to overcome is making sure that the marriage lasted at least 10 years. And if that's the case, then you are entitled to a spousal benefit. Since you were born in 1953, you were eligible to be grandfathered into an opportunity for what's called a restricted filing. Doesn't happen that often. We don't see that often as much anymore. But your spousal benefit at full retirement age would be eligible to you, and then you would switch to your spousal benefit at age 70.
Social Security question number 5. My husband is currently retired and claiming worker benefits. I'm 52, and we have a 12-year-old and a 16-year-old. To what benefits is our family entitled?
And there you go. You just used the right word, family benefits. So that's the next coin term that we need to talk about with Social Security is besides workers, besides spousal, besides widows, besides survivors, there's also family benefits with Social Security. And so to this question here, if you're, in addition to the worker benefit, both you, the children, are eligible for a benefit of 50%. And here's another little coined phrase. The children in this example are eligible for something that is 50% of what's called the PIA, or what's known as a primary insurance amount. Again, it's a subtlety, it's jargon that has to do with Social Security. And it's one of the things that why Social Security is so hard to understand for a lot of people, because they get hung up on what's PIA, what's a worker's benefit, what's a spousal benefit, and so on.
A lot of different nuances that come along with the Social Security. Question number 6. My wife is 65 and planning to wait until age 70 to receive her retirement benefit. Her PIA, and that's, you said primary insurance amount?
Correct.
Okay, her PIA is $2,600. I'm 62, retired, and would have a modest worker benefit of around $800 a month. We really could use some benefits now since I'm no longer working. What can we do?
So the answer is, and I'm going to read part of this because it's a little bit of a detailed answer, but so in that question, she may be a good candidate for a worker's benefit right now. As long as she's not working, she'll be, and so if she's not working, then she'll be maybe a candidate. If she is working, she's going to be subject to what's called the earnings test. So in other words, drawing Social Security while you're still fully employed under your full retirement age. If she's currently not eligible for a spousal benefit, when she files, will be receiving the worker benefit. Does this sound like double talk? I mean, I used to get this from my teenagers. So when your wife files at age 70, you'll be entitled to the larger spousal benefit. So in this case, you mentioned $800. Her $800 worker benefit will be permanently reduced because she's claiming early, if she does claim early. But a good portion of the benefit, which would be about $500 of that $800, is the spousal benefit. So as I said, this sounds like double talk, or you get directions and it says go like this. And so it's no wonder that it leaves people scratching their heads.
And Social Security is just one of the components to trying to figure out an effective retirement plan. Just like your vehicle's engine needs certain components to run at its best performance, retirement planning needs to be completely addressed for best results. Finances, taxes, estate planning, and Medicare planning. And at Market Advisory Group, we provide the components of planning for complete retirement with all aspects working together. If you'd like a complimentary visit with us, please give us a call right now at 316-252-8707. And be sure and visit our website at ionretirement.com. We'll be back with the second segment of the show right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare Advisors, all in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you to get you answers in real time, to help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Eye on Retirement. In the first segment of the show, we dedicated it to Social Security and some of the common questions and concerns that come our way around the conference tables of Market Advisory Group. And we'll continue to visit about Social Security in this segment. Danny, you have a client that's getting ready to retire and had questions about their healthcare choices. I'll let you pick up the story from there.
Sure. So here's an interesting couple that we came across, and they became clients, and both in the pre-prospective client, if you will, phase, and then also subsequently, after they became a client, they kept continuing to tell me about their world's journeys and what part of the world they've been to and traveled to. And as it came out further, they were looking for a place to retire other than the United States. And so they had settled on, they had picked a particular country on the world map, if you will. But what they didn't understand about what those decisions to retire in another country was, what would that going to be do, for example, for taxes? What would that do for health care? So let me start out with talking with Joshua. This is where the story gets interesting. As we talked in the previous block, if you will, the Social Security is the bedrock of any person's, or most of our Social Security income planning for retirement. When to take it, when's the best time to take it, where do I maximize that for me? For these people, when they retired to a different country, they wanted to start asking, okay, where do I get my Social Security from? How does it arrive to me? What parts of that, Joshua, is actually taxable? How would that work if they were in a different country? I know how it would work in this country for taxes, but what would it look like for there?
Yeah, so when we talk with people, we often talk about they need the financial advisor working with the tax advisor. That's the bedrock of what we do. And in this situation, they are in a unique place where they need tax advisors, plural. So just as they're talking with you, I come in the room, we talk about what's going to happen in their situation. We talk about how, because they're still U.S. citizens, they're obligated to file a U.S. tax return. And depending on their facts and circumstances, they may not have a tax liability, but they still need to file a return to claim those exemptions. However, wherever they're going to live, they will be subject to the tax laws of that location. Every country, surprisingly, has their own sets of tax laws, right?
Interesting.
And so they need to work with somebody in that country to understand what's going to be required of them in that country, what tax treaties are in place that may let their Social Security receive a favorable tax status just like it is here, or is it treated like other sources of income? Now, the getting it piece is more convenient than it used to be just because of the modern banking system, right? They can have it direct deposited in a major U.S. bank, and those U.S. banks have places all over the world, wire transfers, et cetera, et cetera. So those mechanics are a lot simpler than they used to be. But that tax component, they're really going to need those two tax advisors to talk into that question.
And a lot of times we'll do tax planning, and Joshua is a key component of that when we do tax planning with clients. And that gets into a portion of the tax code that has to do with what's called IRMA, Income Related Monthly Adjustment Amount, and how that affects their Medicare premiums. And so how does it work for the tax part of it? But now let me switch over to the health part of the concern as well. So if I'm paying more for Medicare premiums when I'm living in a separate country, let me back up and ask, first of all, where's my health insurance coming from? So Mark, let me throw it to you. And where would they even need Medicare if they're in a foreign country?
Well, whether they would need it or not, that's kind of up to their own health issues, but I can tell you how Medicare works in another country. Basically, Medicare, original Medicare, Part A and B does not really extend to another country. You can have Medicare A and B, original Medicare, and you can purchase a supplement just like you would here in the States. Unfortunately, the supplement's not obligated to pay for anything outside of the United States. There is some narrow coverages when you're traveling outside of the country, but typically those only extend you for the first 60 days that you're out of the country. And if you're going to be there longer on a permanent basis, then they have no obligation to pay those on an emergency basis. There is some rulings that have to do, or some regulations have to do if you're living in the United States and you have an emergency and the closest facility that you would need would be in another country, say you're on the border of Mexico or Canada, that those charges could be covered, but the foreign country can't, or the hospital there can submit those charges, but there's no guarantee they're going to get paid, and there's also no guarantee that they'll bother to submit those. The other option, of course, people bring up is, what about Medicare Advantage? There are some policies that may, once again, give you some coverages outside the country, but typically they're limited to an emergency basis only. And once again, it's typically within those first couple of months of that. So you do have the advantage to travel outside the U.S. on both of those, original Medicare or Medicare Advantage, but they're really only going to cover you on a dire emergency basis and usually only within those first 60 days.
So it sounds like then people a lot of times will want to move outside the United States for cost of living purposes, or because of the scenery might be better than wherever they're currently living. So, but one of the factors that really they need to take into consideration, sounds like, is, all right, what's my tax situation going to look like when I live in a different country? And number two, what's my health components going to be? So you want to make sure that your health insurance that Mark talked about is going to cover you. If not, how are you going to cover that piece of the situation for you? Same thing as Joshua was talking about. You don't want to just think because of cost of living pieces, that's where I want to live to a different country. You need to make sure that you're covering the health part of it and that you've factored in how are my taxes going to work in a different country.
The information we provide on this show and the scenarios we discuss with you all highlight why a person shouldn't go it alone in planning for retirement. Even if you have a financial person, are they able to give you all the tools necessary for a complete retirement plan, estate planning, tax planning, and provide you with the latest and best in Medicare options? If you'd like to set up a complimentary visit with us, just call our operators right now at 316-252-8707. Again, the number to call, 316-252-8707. And please be sure and check out our website at ionretirement.com. We'll be back with the final segment of this episode right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into the final segment of today's show of Eye on Retirement. We're talking today about how we work collaboratively at Market Advisory Group, a whole team coming together with its sole focus being the client. Let's talk about a different subject for this segment. A different client and spouse were trying to set up their estate so that at their deaths, they wanted to divide their estate between their children and their grandchildren. Their names have been changed to protect their privacy. Danny, give us some more details on this story.
So let's call this couple Steve and Mary, and this is when Steve's father, and we're going to call him Fred, was alive. Fred had done some estate planning for himself, and Fred was thinking about how his assets would be distributed upon his death. And so Steve and Mary, Steve was Fred's son, and so Steve and Mary at that time had one grandchild, which had a disability from birth. They currently have 3 grandchildren, which we'll get into in a second, but at the time of Fred's planning, they only had one grandchild, had a special needs. And because of the grandchild's disability, Gerald, I want to throw this to you. Would it cause any problems at Fred's death for the grandchild to inherit some of Fred's estate as it relates to the health insurance benefits that the child is receiving, the grandchild?
Yeah, absolutely. A person who is disabled and is receiving government benefits, whether that be Social Security, disability, whether it be Medicaid, can put that benefit in danger if they have more than a certain amount of assets or income. So normally, for Medicaid purposes, $2,000 is the cap of assets that a person can have. So it's very easy if you leave the money directly to that disabled individual to kick him off Medicaid. And in order to get back on Medicaid, they had to spend whatever money you left to them and then reapply for Medicaid. Which
so it's a hassle.
It's a big hassle. And, some Medicaid provides certain programs that may not even be available through your own self-pay.
So
go ahead.
How would they solve that then? So instead of, if I'm Fred, giving it to my special needs grandson, and at my death, I don't want to disqualify my grandson from something, how would you plan as an attorney, how would you plan around that for the client?
There's 2 answers to that. One is from Fred's perspective. If Fred can do what's called a special needs trust just for that child. The purpose of a special needs trust is to protect whatever you leave to that disabled individual from affecting their Medicaid, government benefits, and other things. The money you leave in this special needs trust can provide for most of their needs. The only thing you can't provide is food and shelter, but you can pay for clothing, you can pay for travel, you can pay for TVs, computer. The sky is the limit as long as it's not food and shelter. Now, if on the other hand, we're looking at it from the point of the grandchild, having received this money without Fred planning ahead for it, then there's another opportunity for that particular individual to do what's called a first party special needs trust. And they would create their own trust with that money. The money would be protected and not counted against them to disqualify them from benefits. And the only difference is that at the end of the disabled individual's life, the money has to go back to the government to pay for their costs. Whereas if Fred had set up the special needs trust, which would be a third-party special needs trust, then that money could be passed to other of Fred heirs at the death of the disabled.
So is this special needs trust, would that be considered a revocable trust? That would be irrevocable? How would that work?
It can be both. Some people set it out, during their life to be revocable, so they can make changes
during Fred's life.
During Fred's life, correct. After Fred would have died, then that trust would have definitely become irrevocable, and nobody can make any changes to it.
So now, Joshua, from a standpoint of taxes, so now they're using the special needs trust to plan to keep the Medicaid and any kind of Social Security benefits for the grandchild. But What happens with taxes and trust, whether it be a special needs trust, what Gerald was just talking about, or maybe just a revocable trust? What happens with the tax code, generally speaking?
Yeah, generally speaking, if it's a revocable trust, a lot of times we don't even see it because it's treated almost as invisible or disregarded by the IRS. But when that original person passes, such as Fred in this case, then it would become irrevocable. An irrevocable trust, it's almost like a separate person. And that separate person has to then file their own tax return. Even though there may not be any tax due, the return needs to be filed to report all that as appropriate off to the government to satisfy the obligations of that trust.
So whether you're doing planning for Medicaid purposes for a grandchild, there are tax implications. Whether you're living out of country, there are tax implications. We want to make sure that we're covering these things appropriately and that we don't miss something that we don't know to ask for. And that's why a collaborative approach is such a great thing.
Can you see how whether it's sometimes as simple as one of the basic building blocks of retirement or something as advanced and complex as tax laws, trusts, and the various kinds of trusts, why collaborating with a complete retirement team makes sense? Let's visit. In fact, feel free to set up that visit right now. The number to call, 316-252-8707. Again, 316-252-8707. That's all the time we have this week. I'm Rick Everett, reminding you that we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.